Hi, this is Jerry, ForexTradingMagic.com. We're going to do a follow-up update from the update earlier this morning on the Euro-Dollar daily chart. The time is now 9:35 p.m. The date is October 6th, Monday, 2014. Okay, I told you earlier today that I was looking for a price to pull back up into the level of selling here, which is designated by the red lines. Okay, and I told you when price gets here, drop down to the lower time frame and look for a signal, a short signal. Okay, we don't have a short signal here, though we have a down bar on the 4 hour here. This is a down bar, but it's not a signal bar. A signal bar is a bar that will tell you that there has been a shift in the balance of supply and demand. And so just a regular bar itself does not tell you that. It tells you that in the form of a pattern. Let's see if we can find a short signal on the 1 hour. Here we go. We get this bar here. You see here, there's buyers in this bar. It's a green. That number is green, right? That tells us that buyers are in this bar. Yet, this was a down bar. This bar closed down. So this was a bearish divergence. A divergence between price and volume. There's bullish volume in this bar, but it couldn't prevent price from going down. Okay? So that tells us that the bulls have gotten weak, and that told me to get in at the close of this bar, which I did, and I actually got out at the close of this bar because I would like to see a pullback up and test our spine here, okay, on the daily chart here, on the daily time frame. So, but from the signal into where we are now, it's approximately 25 pips within a couple of hours. And of course, again, I do expect price to continue down, but a healthy down move we like to see a move back up on the 1 hour and then a move back down. So I'd like to see some buying come into the market, move price up a little bit, and then to go below to trigger the stops. And that's why now when at the close of this bar, I got in on a break below the low of this bar because the buyers in this bar have their stops below there. So it triggered the stops here, which results in a bull squeeze. Okay, a bull squeeze is when price moves to trigger the stops or clusters of stops where most of the bull or long positions are sitting. A bear squeeze is just the opposite, when price goes up above a bar holding short sellers and goes above the high of the bar to trigger those short stops to buy. Okay, so if you're trading with me, you're one of my people, you should be in short here based on the 1 hour if you're looking at the intraday chart. And so now where we want to look to as this bar here, the close of the next hourly bar, okay, because these are short sellers in this bar, right? Okay, so when price gets up here, they're in a losing position, right? They're losing money, so they're waiting for price to come back here so they can break even. So they're going to start buying in this bar, okay? Now if they hold above the high or the real body high at the close of the hour, then I would expect price to go ahead and continue down. And you see here, here's another retail buyers are sitting in this bar. If we get below the low of this bar, it's going to trigger those sell stops down to take us down further. Okay, but so I told you ahead of time, and this is what I do. I tell you ahead of time what the market should do and what we should be looking to do if it follows our projection. All right, this is Jerry, ForexTradingMagic.com.